And Collective is an all-in-one sort of financial solution for your business. We'll handle your business formation. We'll make you into an S corp. We'll handle your payroll, your bookkeeping, and your tax filings, so you don't have to worry about it, and you can focus on running your business. But today we have an event we like to call Tax Tuesday. And essentially, what it is, it's just an AMA. It's an Ask Me Anything session to where you can ask me anything about taxes. Maybe you want to know how bookkeeping works. You want to know, how the process of becoming an S corp works. Like whatever you are curious about, please, put in the comments and ask away. And real quick, to get the legal stuff out of the way, since this is just kind of an Instagram session, don't think of it as official tax advice. For your particular situation, before you did anything official with your taxes, you would need to go to a CPA, a tax attorney, an enrolled agent before you acted on any of this advice. It's just educational only. But let's go ahead and get started. I think that we already have some questions. Oh, yes. We had one question from a prospective collective member, actually. And she was wondering, Victoria asked this question. My boyfriend wants to open up an online store to sell digital goods. However, we're not really sure how well the business is going to do or how much money we're going to make. So I'm not really, looking to join collective right now. Since before I know what the finances are going to look like, and I don't want to set up an LLC or an S corp yet, because of that reason. Can he get into trouble if he doesn't set this up? What's the deal here? Well, what I would do is, and this kind of depends on the state you live in. Some states are a little bit more expensive to form an LLC. Like in New York, there's actually specific level taxes. There's an unincorporated business tax that you have when you set up an LLC. But in most states, there's not specific LLC taxes. What I would do at the very least is set up an LLC. If you're not in a state like New York or anything like that. Because what an LLC will allow you to do is, let's say, in 2024, your boyfriend, ends up making a lot of money and it becomes worth it to become an S corp. Since you already have an LLC in place, collective will be able to backdate your S corp election. But the most important thing is to set up an LLC, because if you don't set up an LLC, then you can't backdate an S corp election. You have to have a business entity set up. So yeah, at the very least, I would set up an LLC, and then we can have a conversation later on as to whether or not you need to be an S corp. And please, if you've got any more questions about that, send us a direct message on Instagram, and we'd be happy to address it, more specifically. Okay. What is an S corp? Well, an S corp, there's a lot of people that have, kind of a wrong idea or a misrepresentation about what an S corp actually is. An S corp, funny enough, is not necessarily a corporation. It's not a business entity by itself. It's not like an LLC or corporation or anything like that. It is a tax election. To make an S corp tax election is to ask the government to tax you in a certain way. And before you make an S corp election, before you become an S corp, let's say that you're a sole proprietorship or an LLC. Essentially, all of your money is subject to the self-employment tax. The self-employment tax, it's a tax rate of 15.3%. So, for example, let's say that someone made, $160,000 in their business, and let's assume that they're just an LLC or a sole proprietorship. In that situation, how they'd come up with their self-employment tax is they take $160,000 and they'd multiply it by 15.3%. All your money is subject to it. But let's assume that they make an S corp election on that. What happens technically, when you become an S corp, is you become employed by your own business. You become an employee of your own, operation. And since you're an employee, your business will pay you a salary. It'll pay you a paycheck, just like you'd receive if you work for someone else as a W-2 employee. But, the advantageous, thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary. So, let's assume, going back to my example earlier, let's assume that you make 160,000, and let's also assume that your business pays you, 90,000. And I don't really know, of course, what this person's salary would be exactly. It's a facts and circumstance test. But we can just use that as an example. In that sort of situation, the 90,000 is the only chunk of money that's subject to the self-employment tax. The other 70,000, or just the rest of your money, outside of your salary, those are considered distributions to yourself. You can kind of think of that money as dividends to yourself, conceptually speaking. That chunk of money is not subject to the self-employment tax. So, how you'd come up with your tax savings is you take 70,000 and you'd multiply it by 15.3%. And that's a total of $10,710 in tax savings, close to 11K. So, as you can see, once you reach a certain income level, an S corp election can save you quite a bit in the self-employment tax. I live in Georgia, and we are thinking about relocating to Florida because of no state income tax. However, our projects are in Georgia and New Jersey. Is it a benefit tax-wise to move? Well, unfortunately, with so many answers to questions about taxes, it's the same answer. And that answer is it depends. So probably just all things being equal, there probably is tax benefits to moving in a state that has income tax to a state that doesn't, like Florida, because you are correct. Florida does not have any, sort of state income tax. So all in all, probably. Now, because typically your tax home and where your tax is usually where you are located. That's where your business is located, usually, is wherever you live, wherever your address is. So even if you do have some projects in other states, then, usually it's not subject to income taxes and stuff from other states, usually. But of course, there's always exceptions to this. So don't take this as set in stone. But generally, there probably is a tax benefit to move into Florida. All right. When are quarter four quarterly estimated tax deposits due? Great question, because, the last quarter ends on December 31st. So when do you pay them? The answer is they're due by January 15 in 2024. So usually what your estimated tax deposits are always due half the month after each quarter. So for example, the first one's due April 15th because January, February, March, that's the first quarter. So the last quarter is due on January 15th. As long as you get paid in by then, you won't face any penalties or anything like that. Here's another good one. What are some things I should consider when going into a business partnership? Well, one of the main things is to form your company correctly, form your business correctly. And typically what you'll need if you're going into a partnership, you'll need to form a partnership, which is essentially a multi-member LLC. It's a partnership is when two or more people are on an LLC. So that's the first step. Then the next step is to make sure that all the partners are in agreement on how money is going to be paid, on how business losses will be sort of divvied up, things like that. Is it a limited partnership? That's important to keep in mind. And when you create an LLC or a partnership, with an LLC, it's called an operating agreement, a single member LLC. And this operating agreement is essentially a legal document that goes through how many members are in the LLC, how it's going to be governed, all that information. With a partnership, that is called a partnership agreement. So it's important, I would say, to have a lawyer. If you're going into a partnership, have an attorney draft a partnership agreement for you to where all the partners sign. Everyone has, a good understanding of what's going on and how profit will be split up. So that's what I would say is one of the most important part is to have a clear-cut partnership agreement. Tips for starting an LLC. Well, really, I would say the tip for starting an LLC is to go, and I hate to say this, shameless plug, but it's true, is to go to a company like Collective that can assist you with it. Because, what we'll do is create the LLC and also write your operating agreement for you, which is just, the kind of the legal bones, the legal document behind your LLC. And, that's just really important, I think, to have sort of drafted by a professional, just because, the legal foundation and like the business foundation for your business is important. This is the vehicle that you're going to make all your money through. It's important that it's set up right. What are the differences between LLCs and S corps in California? Well, really the same difference as they are in any other state is an LLC, all of your money or a big chunk of your money is fully subject to the self-employment tax. When you have an S corp election, it isn't. It reduces it because you can pay yourself a salary. That's the difference between them in California. And that's, kind of the main difference between them in a lot of other states too. And the exception to that are places like New York and I believe New Jersey and Tennessee. They have specific state S corp taxes. They have unincorporated business taxes and things like that. So that's the only difference there. But, in most states don't have specific taxes for S corps or LLCs. End of year tax tips. Well, the first one, of course, is to pay your estimated tax deposits on time. Just so you pay that last one on time, so you can, maybe miss a penalty. And another one is, before December 31st, if there's anything that you need to buy for your business, or if there's anything that you've been needing that you can write off as a business expense, go ahead and make those purchases so they can count as this year's tax years. So this year's tax bill will be lower. That's one. And get things organized. Let's say that if you haven't been keeping up with your bookkeeping, or if you're profit and loss or, tracking transactions, it'd be a good idea to go back and, go through your accounts, get things organized, get an Excel sheet and kind of, outline your expenses and see calculate your net income, calculate all your income and all your expenses. So you'll be prepared when you file taxes in April 15th of 2024. All right. How much of my rent can I write off? Well, essentially, um, how you do that is essentially the home office deduction and a part of the home office deduction. And you not only can write off a portion of your rent, you can write off a portion of your cell phone bill, of your utility bill, of your HOA bill, of any cleaning fees you might have. And how you do that is you take, whatever dwelling you're in, whether it's your personal residence, whether you're, renting someplace, you take the total square footage of the home and you record the business square footage of your home. So however big your home office is, whether it's a room you do it in, how many square footage your business use of your home covers, you take that number, that square footage, and you divide it by the total square footage of your home. So let's say that you live in a 3,000 square foot house. We all wish, right? And let's say that the business use of your home is around 1,000 square foot. That is 33% that you can write off of things. So 33% of your rent, 33% of your cell phone bill, and so on and so forth. That's how you calculate that, and that's how you write those off. Can you talk more about New York specific laws? Well, I can talk a little bit about New York, but I'm a federal law expert. I'm not a state law expert. So I'm not going to be able to talk about it, really specifically, but essentially just what you need to keep in mind when you set up an LLC in New York is that they have special taxes that are subject to LLC income that aren't necessarily subject when you're just a sole proprietorship and before you set up an LLC. So that's something to keep in mind. Something else to keep in mind is that you're legally required in New York to take out an ad in the paper for your business, and publish an article or, whatever, something like that. And that can be that's can be way more expensive than what people realize. Sometimes that can be over $1,000 to do. So, unfortunately, New York is a great place to do business. It's a thriving city and all of that, of course. But, unfortunately, tax wise, it's a little bit, more expensive to live there. All right. I saw this of today as January 1st, 2024. The Department of Treasury requires most legal entities to report its BOI, business beneficial ownership information. Please share more. Um, yes, it's pretty intense. What Congress has done is essentially you have to register your business and you have to report ownership information about the LLC. So let's say that you set up an LLC, you have to report, who you are, how much of you own in the business, things like that. So that's something to keep in mind. And unfortunately, that's the federal government making it just a little bit harder to keep up records for your business, which just makes it more important, honestly, to have a good tax company or a good tax professional in your corner when navigating these complexities. Are you guys having a Black Friday sale? Yes, we are. So, just a quick word about Collective. Like I said, you can kind of think of Collective as a all-in-one sort of tax and financial solution for your business. We'll handle everything essentially. We'll get your business set up. We'll set up an LLC if you don't already have one. We'll make you into an S corp, and we'll handle your payroll, monthly bookkeeping, and tax filing at the end. So, what we're doing right now is actually running a Black Friday sale to where if you come by and sign up by November 30th, we'll waive your onboarding fee and we'll give you your first month free and to get your S Corp started for 2024. Because now, especially if you don't have an LLC set up, it's a good idea to start on that as soon as possible so we can be ready for 2024. Because sometimes it takes a few weeks, to get LLCs up and running. So what we do here at Collective is during these time periods where people are transitioning and need to get prepared for 2024, we essentially let you sign up for free and we'll get your business ready. We'll get your business formed so we can hit the ground running in 2024. So, if you think an S Corp would be good for you, if you think you'd like some of this support for your business, please schedule a call with us and you'll speak to a business advisor like myself who'll go through your situation and see if Collective would be a good fit for you. And feel free to send us a direct message on Instagram. We'll shoot you a calendar link. Feel free to go to our website, go through the tax calculator and schedule a call. And we're looking forward to talking to you. All right. How do you know how much to pay yourself with an S corp? Well, that's a complex question because what the IRS says is that your S corp salary has to be reasonable. That's what the IRS says. To where it's a facts and circumstance test. They don't give any sort of objective measures or sort of any objective criteria when coming up with a salary. So let's say some methods take several things into consideration. They'll take into consideration, where you live, what area of the country are you from? How many years of experience do you have working in your industry? How many hours a week do you work? Things like that. You can come up with a method to determine how much to pay yourself. But also with situations like these, especially when it comes to the federal government and making sure that you remain compliant, it's a good idea to have a tax professional that comes up with a salary suggestion for you, which is another service that Collective offers. By the way, we kind of guide you on what is an appropriate salary to pay yourself. What's the difference between sole proprietorships and single member LLCs? Well, when you're a sole proprietorship, essentially you and the business are the exact same thing. Everything, all your activity and all your business financial information is reported under your social security number. It's one and the same. So, and also too, when you're a sole proprietorship, when you don't have any sort of legal structure set up, all of your um, all of your personal assets and your personal income is open to litigation. If anything were to happen to your business, or if anyone were ever to sue your business, they have a legal right to your personal assets. But when you set up an LLC, and that's a legal structure with the state, by the way. Wherever you live, you'll need to form an LLC with your state, and that's usually done through the Secretary of State's office of your state. And an LLC is just a legal structure. It's a legal document that declares that you have an LLC. And what that does is it separates your business life and your personal life. When you have an LLC, you can also apply for an EIN number, and you can use your EIN number when reporting, financial information and things like that. It separates it. And you can open up an official business bank account that's connected to the LLC. And if you keep things organized and kind of keep your business income flowing properly through business bank accounts and through the LLC, then you're more protected. You have less legal exposure because people can't, if they sue you, they can't go after your primary residence or any sort of personal income or separate income. They can only go after the assets of your LLC. And also, too, having an LLC, the difference between the sole prop and the LLC is that having a business structure set up like an LLC allows you to become an S corp. You can't do that if you're just a sole proprietorship. You have to set up an LLC first. All righty. Can a partnership become an S corp? Absolutely. A partnership can make an S corp election. And like I said earlier, all a partnership is two or more people on an LLC. That's what it is. So what you need to do though is also, have a really good, partnership agreement behind it, and it'll kind of outline, how much salary each partner is going to be paid, how much in distributions can they take, things like that. What's the difference tax wise when you have an S corp? Are there any additional tax forms that you have to take care of? Yes, there is. For one, you have to take a care of payroll tax reports. You have to do those with your state, so that's one thing. But you also have an S corp tax return that comes into existence. You have a business tax return, and it's a corporate return, and it's pretty complicated. It's a lot more complicated than your personal return. So that's just kind of another reason why it's important to have, when you have an S corp, it's important to have a tax professional that can help you out with that business tax return. And it's you still, though, even though that you have a business return, you still have a personal return as well. So what happens is you file the S corp tax return first, and that one's due by March 15th of every year. It's called an 1120S. Your personal tax return is called the 1040, Form 1040, but your S corp tax return, it's 1120S. And after you file that one, a K1 will be issued. And that's just a piece of paper that shows, how much money you've paid yourself in salary and distributions. And you take that K1 and you plug and chug numbers on your personal tax return. You can kind of think of the K1 as almost like a W-2 form for your entire business. And but you still have a personal return, and you use that K1 to finish up filing it. Do you still have quarterly tax deposits when you become an S corp? Yes, you do, especially because also keep in mind that you're going to be paying yourself a salary. So just like when you work for someone else and get a paycheck, there will be tax deductions that come out of that salary automatically. So, that's one of the ways that your taxes will be paid. But another way, if that doesn't cover it, are through quarterly tax deposits. So what a lot of people do though, and what might be a little bit more convenient, is you can actually adjust your withholdings on your paycheck to be a little bit higher, and maybe cover your quarterly deposits. But anything that's not covered in your, you have an entire tax bill for the year, and anything that's not covered in those withholdings from your paycheck that you'll be getting through the S corp, you'll need to pay via quarterly tax deposits. And all that does is allows you to avoid a penalty. Is it too late to become an S corp this year? Unfortunately, it's a little too late. It's getting a little bit too close to the end of the year. Now, if you have an LLC in place throughout the entirety of the year, it's theoretically possible to backdate your S corp election and all that, but it's usually way too expensive. Like there's a lot of CPAs and attorneys that'll charge $6,000 for something like that, and it just doesn't really make it worth it to go and backdate an S corp election at this point. Can you still have a self-employed retirement account with an S corp? You absolutely can. And what's really advantageous about it too is that you, as an employee of the S corp, you can actually contribute up to the individual limit to your retirement account, as the employee. And then the S corp itself, you can dump additional money in the retirement account as well. So, I've seen a lot of clients that save up to 60 grand in their self-employed retirement accounts. It's another really good strategy to reduce your tax bill. Are there any downsides to having an S corp election? Well, I don't know if I'd call them downsides, but I would call them additional administrative responsibilities. That's for sure. To where, when you have an S corp election and you're an employee of your own business, you have a couple things administrative wise that you've got to do that you didn't have to do before. So one is, of course, you've got to pay yourself a salary. You don't have to do that when you're self-employed, or I'm sorry, when you're a sole proprietorship or just an LLC. And you got to make sure that you file your payroll reports correctly. You got to make sure that you're running the payroll software correctly. So that's one thing. And then you also too, if you don't do it right, you can kind of expose yourself to audit a little bit more. If you don't pay yourself a reasonable salary, it can expose you to audit, and that's never a good time. And then you also have an S corp tax return. You have a business tax return that comes into existence that you didn't have before. So it's really important when you have an S corp to have a tax professional in your corner, because if you don't, you can run into these complexities really quick and get stuck. And that's just the reality with the U.S. tax code. Unfortunately, it's pretty complicated. All right, and it looks like I've answered all the questions here, and I think that's all the time that I have left for this Tax Tuesday. I actually have a prospective collective member that I need to talk to. And like I mentioned earlier, at this time of the year, Collective is giving some great discounts for Black Friday. You can essentially get signed up for free. So we'd love to talk to you. Send us a message on Instagram and we'll schedule a call with you. Go through our website, collective.com, and we'll, kind of talk about next steps on how you can optimize your business.